Hey everybody, and welcome to the final Sunday market update of the year. It is certainly one a little bit impacted by a number of things, including Christmas and a little bit of COVID here and there as well. We'll be having the team today will be initially we'll have, I expect Julian will be in a few minutes to do macro market update. After that, we're playing Orlando's video on US dollar. I'll have a little bit of a look at oil, and then Geoff is in to do some technical overview for us. Been without doubt a bit of a crazy week, and I was just about to log into my Fusion at the start of the show, and looks like the Fusion server is down, and I can't get in. That is a bit of a problem, isn't it? So we will do without charts for now until we get the rest of the team in. Julian, the shirt tells me Christmas party. Am I right?
Yes, Paul. It was a Christmas party, and a very enjoyable one as well too. A little early, and I didn't stay late, so left at 9 o'clock, which is not so bad for a Christmas party on a Sunday. Yeah, mate.
You're walking as again. You're allowed out now, right? So you're everywhere, right?
Yes, for the time being, pre Omicron, we're allowed out, so hopefully that will continue, and we'll try and keep it out the country as best we can. And our erstwhile Prime Minister will do an amazing job of keeping it away from all the crowds.
Yeah. No, they've done an amazing job of keeping Delta out as well, to be fair. Oh no, they haven't, have they? Sorry.
I'm just letting that one go, Paul. Nice try.
Omicron, mate, it's the story in the background, and I want to talk about oil a bit later on because, the news remains the same, highly transmissible, not as serious, but governments are going to step in and they are going to take steps here. And if they start closing down economies, we are going to have some interesting things to deal with in the markets. And it really is again, I'd say, interesting time. It's I'll tell you what, Julian, I reckon most of the world's going to celebrate Christmas. I'm not so sure they're going to get to New Year without a few more pretty serious lockdowns here and there. What was I reading a few minutes ago? 90,000 cases in the UK, 90,000 cases in the US, including my sister-in-law and her husband.
Yeah, I think you're absolutely right, Paul. And look, I think this is a really interesting time. So we've talked about it on the broadcast group. For those of you that just caught my Trader Cafe, I was talking about it there as well too. There's been a change. The Fed has pivoted. Now, you could argue that this is the Fed getting its act together, or you could argue that this is the Biden administration getting frustrated that inflation has got out of control, which means people who vote Democrat don't like inflation. Normally, it's the lower end, marginal parts of society that really struggle when inflation starts to rise. And so it's not unusual to think that Biden would try and do something about that once it gets to the almost 7% level it's got to in the States. So look, this is the really key thing. So the Fed has pivoted as a result of this, and I think that this is a significant change for the markets. Now, why is it a change? It's a change because liquidity is going to be withdrawn at a faster rate than we thought it was going to be at the beginning of the week. And also because other central banks around the world are doing exactly the same thing. So that's one part, that's one leg of the equation, right? The second leg of the equation is what is the government doing? Okay, because there's two aspects to liquidity. One is the ones liquidity that's being provided by the central banks in terms of QE and in terms of lower interest rates. And the second leg is the fiscal stimulus that's being applied by the governments, because during the COVID pandemic, of course, we've seen a significant rise in fiscal stimulus around the world, as well as in America. Now, to put that in some kind of perspective, right, because what we love is perspective here, we expect that somewhere down the line next year, we are going to see about a negative 3% impact on GDP of the fiscal policy from the Biden administration. So, yes, they're spending money. Of course, governments always spend money, but compared to last year, it's going to have a negative 3% effect. So combine that with rising interest rates, combine that with a QE program that has been stopped, and it doesn't take you too long to sort of figure out in your mind that my favorite topic, whenever I start talking about markets, is liquidity. This is a great quote from Stan Druckenmiller, who said that earnings don't move the overall market. It's the Federal Reserve that moves the market. And they do that because they focus on liquidity. You look at liquidity, that is what moves markets. And all I see in front of us for the next 3 to 4 months at least is, if not 6 months, is declining liquidity. So the question is, what's going to happen next? So when you look at what's been going on in some of the stock markets, it's very interesting. Okay, this is a divergence. So the red chart is a chart of the S&P 500. Special topic here, it's a cap-weighted index, which means that Apple, Google, those sort of shares, as they get bigger and bigger and bigger, it forms a bigger proportion of the index. So it looks good based upon just a few stocks doing really well. When you look at the Russell 2000 for the year, we are almost down for the year. Right? We're not up the magical 16-17% the S&P is up. So what does that mean? The Russell 2000 is mid-cap America. So the basic stocks that you would normally see in America, stocks under I think the threshold is $5 billion, I think. So in terms of valuations. So this is where traditional American companies tend to be, and they try to break out in November to a new high. They failed, they collapsed, and they've now collapsed back. We're sitting at the bottom of the trading range. Doesn't look good from a technical perspective. So you got something going on here, right? There's the breadth of the market. There's a momentum, bearish momentum signal going on. There's a bearish momentum signal going on that that I think at the moment suggests to me that the Christmas rally may be a little bit muted if we have it. And in all likelihood, it means that Q1 next year is going to be a little bit tricky for stocks. So if it's tricky for stocks, what else is on the equation? Now, you know, there's the gold market as well too. We could go look at gold. We could go look at oil. And I know we're going to have a look at the currencies further on, but just bear in mind that this is really where I see things right now, right? So I see liquidity falling away. I see the risks rising for stock market underperformance. It could be a rocky start to next year, whatever happens for the next 2 weeks. And I hope the market rallies like it normally does this time of year. So that's good. But I think after that point in time, financial conditions are going to be tightening quite quickly. And that's going to have a negative impact on quite a few asset markets, most notably the US stock market. Probably, Paul, I think I'll leave it there. That's my sort of my macro overview, but it was a big week, and it was a big week for these reasons, right? The Fed is starting to move quicker. The US government is starting to wind back the fiscal stimulus as well too. This is like you've had the wind at the investors' back for the last 18 months, and now that wind's been taken away. Now it's becoming a headwind.
It'll be really interesting, Julian, to see what happens to these Robinhood type people who have come in on retirement savings and invested. Money given to them by the government into these markets, and really they haven't yet faced a market that is anything but up in a straight line. And interesting to see how they deal with what's going on as well.
Yeah, look, actually on that topic, that's a really good point that you're making there, Paul. The reason why I'm just chatting just for 2 seconds is I just want to show you guys something, because I think this is worth having a look at. Let me just share my screen over here just for 2 seconds, right? This is, hold on, let me just move you guys out the way. This is the chart of Robinhood, if I could find it. Here we go. And so since the IPO, Robinhood got launched at about $40, went all the way up to $80. Now it sits at $19. Okay, so that's what the market's seeing at the moment. The market is seeing that retail participation starting to walk away from the market. So two things are happening here with this valuation going down. It means not as much is being traded. And if it is the same amount that's being traded, it means the information isn't as worthwhile as it used to be before. So Robinhood aren't getting paid for it. So this is an earnings problem that Robinhood has. I don't think this is confined to them. I think retail participation is slowly withdrawing from the market as the market, generally speaking, apart from the majors, starts to struggle. That's what we're seeing out there. So I thought you guys might like to see that chart. It's just a really interesting sign, and I view these things as leading indicators for what's going on in the broader market. It's not just here; we're seeing it quite a few other markets as well too.
So, man, if I can hold you for one more thing, my recollection is about 6 months ago you told us that for the first time ever, retail volume was higher than commercial volume in the markets. Do you know if that's still the case?
Good question. I'm not sure, to be honest with you. I know that the amount of retail participation this year has been absolutely extraordinary. So I think there's the investment this year by inflows into mutual funds and other funds, I think, has been something like the bigger than the last 19 years combined. So it's an extraordinary participation, right? But yeah, if you look at what's gone on, the S&P is only up 15%. So that sort of suggests to you that maybe that money is not being used wisely. Maybe it's being spent on other things. I'm not quite sure. I can show you a bunch of different sectors of the US market where we can see stocks that are not doing very well. Right? This isn't a widespread, broad-based bull market rally. This at the moment appears to me to be a few major large cap stocks holding us together.
Yeah, that's it, right? Maybe 90% of stocks in the US at the moment are squared down, and 10% of the big ones are up, and it's making it look like it's going up when there's the grassroots are still hurting a bit, right?
Correct. Yeah, exactly. So that's why you see Robinhood trading poorly, because that retail participation, if they have been involved, they aren't anymore, right? They're beginning to leave.
Cheers, Julian. Thank you very much. And thank you for your amazing sharing for the entire year. Great to have you along, mates. And thanks for coming on Christmas to our last show of the year.
I did my level best. And look, guys, have an absolutely fantastic Christmas. I think this is going to be really interesting trading Christmas. So maybe don't put the screens away for the next couple of weeks. I think it's going to be fun. There's lots of things happening. Have a look at that Trader Cafe to get an outlook on all the markets. I did my Super 7 today to give you a good idea of the technical picture. There's lots of things going on there. Lots of tradable movements I think are going to happen the next 2 or 3 weeks. So, Paul, look, have a fantastic Christmas to you guys and everybody out there if you're listening. Thanks for listening to us through the year and listen to me through the year, and best wishes and great trading for the new year.
Cheers, Julian. Thank you very much. If you're looking for Trader Cafe, you'll be able to pick it up on YouTube, Accidents to Wealth, Facebook, or Twitter. All recorded for you guys there, so you better grab that from there. Thanks again, Julian. Have a great evening. Say hi to Yvonne, and thanks for popping in tonight and helping us straight after the Christmas party. Really do appreciate it. Cheers.
Cheers, Paul. See you. Cheers, everybody.